purchases book, sales book, purchase returns book, sales returns book, bills receivable book, bills payable book, journal, ledger and subdivisions of ledger. Dear students, today we will discuss about purchases book, sales book, purchase returns book, sales returns book, bills receivable book, bills payable book, journal, ledger and subdivisions of ledger. All these are subsidiary books. Purchases book. The object of purchases book is to record credit purchases of goods for resale. Each inward invoice, after it has been checked as to calculations and also as to the quantity, quality and price of the goods received, is numbered consecutively and then entered in the purchases book. It is deemed unnecessary by many concerners to copy the whole of the invoices in the book, and consequently only a reference to the particular number of the invoice is given in each case, the invoice itself being properly filed in consecutive order for facility of reference. Purchases book. Sample purchases book contains date column, name of vendor column, inward invoice number column, ledger folio column, amount column. So each invoice is recorded date wise in this purchases book. Each personal account is credited with its respective amount and the monthly total of this book is debited to purchases account in the ledger. Personal accounts of Red and Company, the vendor, Charlie and Company, Carson, Smith, all these are vendors. These accounts are credited in the ledger against their folio number in the ledger, and the total of this column to this book is debited to purchase account in the ledger. We will not make 4 entries in the purchases account. We will make only 1 entry against the amount for the month. While recording this book, it must be noted that only credit purchases of goods that have been bought for the purpose of resale are entered. Any other credit purchases would be passed through the journal. So cash purchases will go to cash account. They will not appear in this purchases book. Sales book. The object of sales book is to record credit sales. The rulings of this book are identical with those of the purchases book. An outward invoice is made out for each credit sale and checked as to quantity, quality and price of the goods before the latter are sent out to the customer. The carbon copy of the press copy of the invoice remains with the firm and the original is sent to the purchaser. Entries are then made from these copies of outward invoices into the day book or sales book as shown below. Sample sales book. This contains date column, name of customer column, outward invoice number column, ledger folio column and amounts column. Each personal account is debited with its respective amount and the monthly total of the book is credited to sales account in the ledger. Care must be taken to see that only credit sales of the goods in which we deal are recorded through this book. Any other credit sale would be passed through the journal, and cash sales are recorded through cash book and bank book. Purchase returns book. This book records returns of outwards, that is, return of goods bought by us. A debit note is made out for this with a carbon copy, carbon duplicate and sent to the party to whom the goods are returned. Entries are then made in the purchase returns book from the debit note book, giving a reference to the number and each debit note as follows. Sample purchase returns book contains date column, name of vendor column, debit note number column, ledger folio column, amount column. Each individual personal account is debited with its respective amount and the monthly total of the book is credited to return outwards account in ledger. Return inwards. Sales returns book. Return inwards, that is, return of goods sold by us, are recorded in this book. On receipt of goods, credit notes with carbon duplicates are made out and sent to those customers who have returned us the goods. Entries are then made from the credit note book into the sales returns book, as follows. Sample sales returns book contains date column, name of customer column, credit note number column, ledger folio column, and amount column. Each personal account gets the individual credit and the returns inward account gets the debit with the monthly total of the book. The purpose of this book is to keep a detailed record of all the bills received by the trader and to afford a convenient medium for posting bills receivable transactions. This is about bills receivable book. A bill receivable is one in respect of which the trader is entitled to receive money at some specific date as shown on the face of the bill. As each bill receivable is necessary particulars connected with it, such as the names of the drawer and the acceptor, the date of the bill, the amount, the due date, etc., are entered in the bills receivable book as illustrated below. Sample bills receivable book contains bill number, date when received, from whom received column, name of the acceptor column, where payable column, date of the bill column, term column, due date of the bill column, ledger folio, amount of the bill, CB folio, and how it is disposed of. Posting. The account of the person from whom each bill is received is credited with the amount of that bill, and the monthly total amount of the bill received is debited to bills receivable account in the ledger. Bills payable book. This book is kept to record full details of all bills payable accepted by a trader and to afford in convenient medium for posting bills payable transactions. A bill payable is one which has been accepted by a person and the amount of which he is under obligation to pay at some definite future time. When on accepting a bill payable, full particulars of the same are recorded in the bills payable book as shown below. Sample bills payable book contains bill number column, date of acceptance column, by whom drawn column, to whom payable column, where payable column, date of the bill column, term column, due date of the bill column, ledger folio column, amount of the bill, CB folio column, how it is disposed of in the remarks column. Posting. The account of each person whose bill has been accepted is debited individually with the amount of the bill, and the monthly total amount of the bill accepted is credited to the bills payable account in the ledger. It must be noted that the same bill is bills receivable to one party and bills payable to another party. The person who is to receive money on it calls it his bills receivable, whereas the person who is liable to pay money for it knows it as his bills payable. As bills of exchange represent money or money's worth, they belong to the class of real accounts. Bills receivable account. The bills receivable account is the account of an asset, and the balance of this account, if any, would always be a debit balance. The debit balance on the bills receivable account on any date would represent bills receivable unmatured and on hand. The account will close when all the bills are finally dealt with and settled. Bills payable account. The periodical total of the bill payable book is credited to this account. On each bill payable being met, the bills payable account is debited from the cash book. The bills payable account, representing as it does the liability of a trader in respect of the bill accepted by him, will always show a credit balance, if any. The credit balance of this account on any one particular date must agree with the total amount worth of the bill payable unmatured as ascertained from the bills payable book. Journal. The use of the journal is very much restricted in modern accounting, and through this book are now passed only such transactions as cannot be conveniently recorded in any of the other books of prime entry. Generally speaking, the use of journal proper is now confined to the record of the following transactions. That means opening entries, transfers from one account to another, rectification of errors, adjustment entries, closing entries, transfers from nominal accounts to the profit and loss account, entries relating to dishonor of bills, and such other transactions for which There is no special book of prime entry such as consignment transactions, joint venture transactions. Journal continued. The double aspect of every transaction is given effect to in the journal by the two money columns provided on the left hand column being used for debit entries and the right hand for the credit. In order to make each entry self-explanatory, it is essential that a concise explanation giving the reasons for the entry should be appended to every entry. This is known as the narration, and the journal and narration of the journal entry is as important as the figures comprising it. Amounts which are entered in the debit column are posted to the debit of the accounts concerned, and the entered in the credit column are posted to the credit. The form of journal contains date column, particulars column, ledger folio column, debit column, and credit column. Sample journal entry. Let us pass a sample, some few journal entries. Bought goods from B on credit for ₹600. This is a credit purchase. That means we are receiving goods. So goods account is to be debited, and we bought it from B. We are liable to B. So his account should be credited. So on date January 1, goods account debtor ₹600 debit column to B personal account ₹600 on the credit column, being the goods bought on credit from B. We now come to consider all the important book known as the ledger. It must be clear by now that every transaction after first being recorded in a book of original entry finds its subsequent destination in the ledger. It is in this book that we get in a properly arranged, classified and condensed form all the necessary information regarding the working of our business. The different classes into which ledger accounts are divided have already been explained in the previous pages. Every ledger account is divided into two sides. The left hand side is known as the debit side and the right hand side as the credit side. If the debit side of any account in the ledger is heavier than its credit side, the account is said to have a debit balance to the extent of such difference. If the credit side of any account is heavier than its debit, the difference is called the credit balance. Form of ledger account will be like this. On the right side, the debit side, date, receipts, ledger receipts are particulars. This is a cash account, so it is receipts. Otherwise, other accounts for it will be particulars. Date column, particulars column, ledger folio column, amount column. Similarly, on the credit side, date column, payments column in the cash account or particulars column in other accounts, ledger folio and amount rupees. This is the format of ledger. All debits are recorded on debit side, all the credits are recorded on the credit side. This is how these accounts are posted. All the monies received, this is a cash account. All the monies received are here. All the monies paid are here. The total monies received are 12,180, and there is a balance of 4,640. After making all these payments to this balance, we have to close this account to bring out to the totals equal, and then carry forward this balance to the next month for continuing the account. A debit balance of any account may represent either an asset or an expense. If such balance relates to a personal account or a real account, it is an asset. If it relates to a nominal account, it is an expense or a loss. A credit balance of any account represents either a liability or a gain. If such balance relates to a personal account, it is liability. If it relates to nominal account, it is a gain. Proper grouping of ledger accounts. In order that desired information may be secured from the ledger without any delay, it is essential that these various accounts be arranged and grouped together in some intelligent manner. Thus, the accounts of customers should be opened in one section of the ledger, and similarly, the accounts of suppliers. The assets account should also be grouped together, and the nominal accounts should form a different section of the ledger. Subdivisions of the ledger. In a small concern, it would not be difficult to accommodate the whole of the transactions of business in the one ledger. But when the transactions become voluminous, the ledger will have to be subdivided, and subdivisions may take the following steps. Thus, there may be a customer's ledger or sales ledger to accommodate the accounts of customers only, a suppliers ledger or purchase ledger to contain accounts of suppliers only, an impersonal ledger or nominal ledger or general ledger which would include all accounts other than those customers and suppliers. In the next lecture, we will discuss about bank reconciliation.